The signal that you're looking for here to reduce equity risk is going to be a break of this 20-day moving average. When that occurs, that's going to flip a lot of these algos that are consistently buying that 20-day moving average. Those will break and they'll start selling that break of the 20-day moving average, and that's where you're going to get this bigger correction. So here's what you need to know before the bell, though, this morning. Nothing happened last week. We were gone for the entire week. Nothing changed. Market sold off just a little bit on Wednesday, Thursday, Friday after reaching to the top of the trend line. Again, this kind of ongoing trend we've had, very stable. It's been a very stable, quiet, bullish trend. Not a lot of volatility. Just kind of trending higher right above that 20-day moving average, but just very well locked into this range of trading. We get to the top of the trend line, we sell off to the 20-day moving average, rally back to the top of the trend line. Wednesday, Thursday, Friday, sold off to the 20-day moving average this morning. Futures pointing higher. The NASDAQ is expected to open up 147 points this morning. S&P is up about 20. So again, we're gonna see the Mag 7 stocks, really kind of driving the cart, so to speak. Google's going to be up 2.5% this morning on news that Apple is going to use Gemini for their AI on Apple phones, which I'm not sure if that's a great idea considering all the problems that Gemini had just recently, of course, with their historical representations of characters. But, I guess they'll get that problem solved, I guess, before Apple takes it on. But again, a licensing agreement between Apple and Google for the Gemini AI software is going to lift Google up this morning about 2.5%. And that's, the issue is that these main stocks, and again, we've seen this for most of this rally, has been driven by these very large cap stocks. And again, that's just where money's hiding. They're highly liquid. And again, we have this very complacent market. And again, as a professional manager, this is where they're saying, okay, where can I put capital where I can have easy access in and easy access out? In other words, I can move millions and millions of dollars in and out of a stock without moving the price a whole lot. Well, that's companies like Apple, Nvidia, Microsoft, very liquid, very safe. You're not going to wake up, if you're a professional manager managing hundreds of millions or billions of dollars for an institution, you don't want to wake up one morning and have a stock down 20 or 30%. That's not going to happen with an Apple or a Google in that case. So again, those are very safe places to put money, highly liquid, in and out is easy. And again, you kind of get those overall flows of their market capitalization weight. As money goes into index fund, it pushes those stocks higher. So it's been a very safe place for professional investors to hide capital. And that's one of the big drivers for this market this year, is just trying to get capital allocated to the markets as the markets continue this kind of rise higher. And again, we've just had a very, very long advance. We're very deviated from the long-term means. We keep kind of coming back to this. These deviations are fairly deep. The good news, though, is that we are finally breaking down out of that kind of overbought area. So the Wednesday, Thursday, Friday, market sold off. We are starting to reduce some of that overbought condition. We're going to reverse that back up a little bit today. We are on a MACD sell signal, but that's been one that's been very tight here. The market's been very extended at this point. This low volatility advance has kept markets overbought. These signals are pretty much neutral at this moment. They're not really giving you a good signal in one direction or the other. And again, the signal that you're looking for here to reduce equity risk is going to be a break of this 20-day moving average. When that occurs, that's going to flip a lot of these algos that are consistently buying that 20-day moving average. Those will break and they'll start selling that break of the 20-day moving average. And that's where you're going to get this bigger correction. Again, when that comes and when it shows up, who knows? Could be a week, it could be a month, it could be this summer. We're going to get a correction, but it's just going to be a function of time until we get there. So anyway, just be careful, manage your risk accordingly, as always, and we'll keep you updated. But that's what you need to know before the bell this morning.